that, tonight it's my pleasure to introduce Andrea Chatfield. And Andrea is an attorney with Cook, Little, Rosenblatt, and Manson. And I want to make sure I read that so I could get all 4 names and not just abbreviate it the way I normally do. Andrea is a very experienced employment lawyer. She's worked with entrepreneurs and recognized by Chamber USA as one of New Hampshire's leading employment attorneys. And it's been a lot of fun talking with Andrea about what we might be able to bring tonight for this discussion. And I think we really hit on it when we said, even when you add one more person to your startup, it can completely change things. And you have to think about the capacity in which they come onto your company and the impact that it could have. And we realized as we were pursuing this discussion that really there could be many seminars that come out of this topic. But we'll start today with a little bit of a higher level picture and look forward to getting started with the conversation and knowing what things we might want to follow up on and how it impacts the various stages you might be at with your ideas and with your companies. And so with that, I will turn it over to Andrea. Thank you for joining us.
Thank you, Maria. Thank you for having me today. It was nice to come out here on such a pretty day. As she said, it's quite blustery out there, so I'm glad we're not outside al fresco, so we can stay inside. But I frequently speak on employment law issues. Our firm works a lot with entrepreneurs and getting them going, and that's, for me, always interesting experience because you're so focused on your business and on that idea that you have that you start to think, you don't think about the other stuff that comes into play once you start adding people. And hopefully, if you're all successful, you will be adding people to your business in a variety of different ways. As small as you may be, you're not under the radar of many of our government agencies and employment laws, but we're going to help you navigate through some of that as best we can. So I'm just going to get started because I know we're kind of short on time here. And the way I wanted to start this, and by the way, the PowerPoint is your handout because I never want to be without my PowerPoint. So you have it in your handout, you can take notes on it, that's fine. And if you stay to the end and put up with me and bear with me till the end, I have a prize, I have a present for all of you. So, it's not alcoholic, but you're going to get that anyway, so it's something else. So what I thought I'd do is really try to put things in context for you by giving you a fact pattern, a little hypothetical. And what I came up with is Green Clean. And Green Clean is a new business that you have developed. It's based on a new cleaning solution that's environmentally friendly and organically based. And you've got a lot of interest. You've gotten funding for this, so you can start maybe hiring some people. You outsource the manufacture of it, but you've discovered that you need 2 things. One, a chemical engineer to help with diversifying the applications of the product, and a business manager. Because you're so busy dealing with the manufacturing piece, dealing with the sales, that you need someone to kind of hold the fort down, so to speak, help with the accounting, the bookkeeping, the payables, the receivables, that type of stuff. And so you need someone to do that, as well as your chemical engineer. So we have 2 people here that you're saying, I need, my business needs a chemical engineer and who's got some good technical skills and technical knowledge. And I'm going to cross over here, sorry. And then also a business manager. And then the question becomes, how do I hire them? Okay? And usually the first part of the decision tree is, are they going to be an employee or an independent contractor? Now, you might think, well, I heard that it's really difficult if you have them as an employee. You can't get rid of them, you got payroll taxes, you got all kinds of things. I'm going to have to get workers' comp on these people, so maybe I'll just make them an independent contractor. Well, there's a few things that you need to really be aware of. You can't simply make someone an independent contractor just by paying them a certain amount of money and reporting it on a 1099. Even if the person really, really, really wants to be paid that way. If they tell you, I've done this before, I want to be, just pay me as a consultant, pay me as an independent consultant, not a problem, it's okay. Even if they want it, you can't necessarily classify them as an independent contractor. Why? Because it's something that is a special status, a legal status, that really has to meet certain federal and state law standards and factors and legal tests in order to be considered an independent contractor. And as we go through some of this stuff, you'll see why. The laws are set up to say, if someone is performing a service for you, we're going to assume they are your employee, unless you can prove to us they're an independent contractor. So it's really important to know what are the factors that we're talking about with independent contractors. The first thing you have to know is that there's no one test. You would think there'd be one test. There'd be one way. You're an employee or you're an independent contractor. Whether I pay you wages for purposes of workers' comp, purposes of IRS, there should be one test. If you're an employee for one, you're an employee for another. No, of course not. That would be too easy. There's actually different tests. In our state, we have at least 3 tests that I know of. In the federal, there's at least 3 tests or 4 tests. And then in Massachusetts, they have a different test. So there's different tests. What I'm going to do is go through the 2 main tests with you today very quickly, because I know this is going to be a high-level thing. The 2 main tests here in New Hampshire. Now, most of you here based in New Hampshire, and any of you based in Mass or Maine? Good. That makes life easy. So in New Hampshire, we have 2 main tests. One is by our New Hampshire Department of Labor. It's in the statutes, and it's for purposes of determining whether you have to give the person workers' comp, whether you have to pay them minimum wages, and whether or not you have to give them overtime. And then we have the other test is the Department of Employment Security, which I refer to as DES a lot, and their test, they have their own special tests for purposes of determining, do you have to pay unemployment income tax, unemployment tax on these workers. And the interesting thing is you could have someone be an independent contractor for DOL standards, which means I don't have to get workers' comp, I don't have to worry about the wage and hour issues, but there could be an independent contractor for DES purposes, which means you still have to set them up and pay unemployment tax on them. So, which becomes a little tricky, but you can do it. The DOL test has about 7 factors, or 10 factors. And I'm not going to run through all of them right now, but the idea is this. The first big thing, well, they want to see if the person has a federal ID number or if they're going to agree to carry their own workers' compensation insurance. That's one factor. The second factor, which is to me the most litigated factor, and the one that we see people have an issue with the most, is the control factor. Does the person have control and discretion over the means and manner of how they perform their work? And we're going to talk about that more in context with the DES test. So you've got control over the time of work is a factor, whether or not this person hires their own people, whether they hold themselves out to be in business for themselves, which we'll go through in a second, whether they're held contractually responsible for the performance of the work, and I'll talk about that too, and whether or not you require them to work exclusively for you. Now I want to look at the DES test, and we're going to kind of walk through this test a little further. One of the reasons why is because it's a shorter test. It's only 3 factors. We call them the ABC test, because in the statute the factors are listed ABC. But it's also the most restrictive test. So if you can get someone to be considered an independent contractor under the DES test, you've got a really good shot at being able to prove they're independent contractors for the DOL test and the other tests. But the DES statute, and this is key, it says services performed by an individual for wages shall be deemed employment unless, to the satisfaction of the unemployment commissioner, you can prove the following. The person has been and will continue to be free of control or direction. So there's that control factor again. It's always key to the employment versus contractor relationship. Who's got the control? B, the service is either outside the usual course of business, or its service is performed outside the usual course of business. So that's an either or. And then the person is customarily engaged in an independently established trade or business. They don't just hold themselves out as being in business for themselves. They didn't just go to Staples and get a bunch of business cards printed up. They actually have an independently established business. They've made an investment in it. They have other business, other customers or clients or whatever. So that has been a fatal requirement for a lot of businesses that have gone up with the DES, that they can't prove the people have their own independently established business. I was actually advising a client recently. He was roofing business, and he had been employing roofers as independent contractors for years. Now he was being audited by DES. And he had some really good evidence to show that these people had their own businesses. They went around, did roofing jobs for other people and for themselves as well as for him. But there was one roofer in particular that DES was interested in. And he had to prove that this guy was an independently established business. I said, well, does he have a business card? Does he have an ad in the yellow pages? Does he have a website? No, not in the roofing business. But he said, well, the guy died. He died like 2 years ago. And DES was auditing him back 4 years ago. And he says, what do I do? So they went and they found the man's obituary. And in it, he was described as a self-employed roofer for 20-odd years. So I was like, yes, it helped establish an independently established business. So let's think about this in terms of our chemical engineer.
Can I ask a quick question here?
Absolutely.
So one of my competitors, I'm in the unmanned aircraft business. Okay. Fly tier 2 type drones. Okay, that do with surveillance for the military. But one of my competitors uses a 1099 approach to not pay people when they are not deployed.
Not pay people.
In other words, they get paid a very large salary when they deploy.
Yep.
Overseas.
Yep.
When they come back, they're on the bench. In other words, they don't get any benefits or whatever for 3 months until they're ready to deploy again. Mm-hmm. Overall, it's a very nice salary for the year, but they're 1099s. From what I think I just saw here, that's not really right. That's not legal, right? If they were in New Hampshire, it surely wouldn't be legal, right? Because they do not have, they're not a business.
They don't have their own business.
They don't have their own tax ID number and the control that the other company puts on them, as far as their working hours.
Right.
If they put a non-compete for those folks, which they have, that non-compete could still work for 1099, right?
Good question, actually, yes. As a matter of fact, there's two things about non-competes. When you're dealing with true independent contractors, which you refer to as 1099s, non-compete, you can have one. In New Hampshire, we actually had a case last year in the business court about that. And they said, you could have a non-compete for an independent contractor. And we'll look at it the same way we look at an employment agreement, which I will talk about, but a lot less restrictions. We're not going to let you say that this person, if you're saying this person can't work in this trade or field for 2 years after they've done this job for you, that's going to be overly broad. We're not going to enforce that. Keep in mind, if you have a very broad non-compete with an independent contractor, the DES goes up to A and says, you're exercising a lot of control over that person. That's an element of control to have them sign a non-compete. So that would be a problem. Now, in your scenario, I don't know, because I don't know the facts or circumstances. But I will say this. Remember, there's always different tests. He's 1099ing them. So these people may be considered independent contractors under the IRS test. But you're right, but for these New Hampshire tests, they're a lot stricter than the federal IRS test for who's an independent contractor. So that's something to be aware of. So if we think about our chemical engineer, let's take our chemical engineer first, okay? So here's this person. The first question you want to ask yourself if deciding whether you can pay this person as an independent contractor is, how much control do I want over this person? I'm relying on their skills, I'm relying on their expertise, so maybe I can say I'm not controlling how they do their work. But if you are going to be controlling, if you're going to be directly overseeing that work, supervising it, telling this person what areas you want to make applications for, what areas you don't, working maybe shoulder to shoulder sometimes with them in the lab or that type of thing, you might be exercising enough control that that factor can't be met. But if the person truly, as you say to them, look it, I want to take the solution and I want to create a couple of applications in a particular industry. Tell me what you got. And it's a discrete project. It's got a deadline. It's got a final end result only. And you tell the person, go do your thing, and then come bring back to me what you've got. Then maybe you are not exercising control, and maybe you meet factor A. So look at the second factor. Is this person doing the service, if it's the service this person's doing for you outside your ordinary course of business? Probably, maybe yes, because you're trying to develop new applications of the product, but maybe not. Maybe this is your ordinary business is cleaning solutions. So that's not true. But if you can say the person's going to be performing the work outside of your business, outside of your ordinary place of business, then maybe they could be an independent contractor. I should say maybe they can meet this factor. So is the chemical engineer going to be working in your lab? Or is the chemical engineer got his own facility, got his own office, got his own works from home type of thing and just does research? So that's what you need to look at. But if they're coming into your lab, if they're going to be using your equipment, that's an employee. Why? Because they're relying on your stuff. It's your place of business. It's your place of business, and it's your business. It's your usual course of business is developing cleaning solutions, and that's what this person's going to be doing. You don't meet factor B, and that person has to be your employee, not your independent contractor, for purposes of unemployment, and maybe other. Third one is the individual customarily engaged in an independently established business. Is this chemical engineer, does he have other clients? Does he do this type of work for other people as a business, not as an employee? You know, he might be an employee of UNH, and then he's going to do this for you on the side. That's not an independently established business. It's not his independently established business. So does he have his own business that he has other clients and that you're just one of his clients? If not, then again, you don't meet that factor. Then for purposes of unemployment taxes, you'd have to pay an unemployment tax on the person if you don't meet all of these factors. Okay. The federal law also has, I mentioned, several tests. Why? For purposes of determining if you had an employee benefit plan, whether you're supposed to include that person in it. For the IRS, for the income tax piece of it, they have their own, they used to be called the 20-factor test. It's a multi-factor test now. But what I did here in this slide is really kind of organize for you what those federal tests are looking for. And they're a little less stringent than that New Hampshire test. All right, you've got the behavioral piece. Does the company control? There's your control factor again, okay? The control is a big piece. How much control are you going to have over these people? And how much control do you want to have? Take that business manager for green clean. I'm going to call it clean green. Trust me, a million times before we're over. But let's take a night, think about that business manager. Maybe you say, you know what, I want this person to take care of my finances. I don't have to worry about that. I'm not sure that's the wisest thing to do, even if the person's your sister or brother, because there should be some oversight over that. But if this person, again, has their own business, that they do accounting services for other businesses, okay, then that makes sense. But maybe you want to control this person. They're going to be you're working on your budgets. They're going to be working with your bank accounts. They're going to be having access to your bank accounts. Maybe you do want to exercise control. Maybe you want this person reporting directly to you on a daily or weekly basis so that you can keep control of the finances as well. Then that control factor makes that person an employee. Financial. Are the business aspects of the worker's job controlled by you? In other words, are you setting the rate of pay? Or are you at least negotiating it? See the difference? And then the type of relationship. Are there written contracts? A written contract with an independent contractor is not a guarantee that they'll be considered an independent contractor, but it is extremely helpful evidence that that person, especially in close cases, shows that that is the relationship. Okay. What's the consequences if you don't get it right? If you do pay him on that 1099 and finds out later on, which typically might happen, let's say you use the business manager and then you say, I don't like her services, so you terminate her. She goes and files an unemployment claim. And then unemployment comes after you and says, we don't have this person. We don't have you in our database. What's going on here? And you say, well, that person's an independent contractor. They weren't an employee. And they say, well, let's go through our ABC factors. And if you don't meet one of them, then that person is deemed your employee. And they say, so you should have been paying unemployment taxes. You should have been filing quarterly reports with us. And therefore, you can be then liable, going back 4 years with unemployment, for unpaid taxes, interest on the unpaid taxes. There's usually fines if you didn't have workers' compensation on the person and it's deemed they were supposed to have workers' compensation under the DOL test. Then you're looking at fines that are applied per person, per day, which can add up, per day of violation. You could be liable for unpaid wages. Let's say you paid that person $1,000 and they said, that's fine, but I worked 500 hours for you. And then the DOL is going to say, well, they were your employee. If you only paid them $1,000 and they said they did 500 hours of work, you only paid them $2 an hour. That's well below minimum wage. And you can get unpaid minimum wage, which comes with liquidated damages. And so it adds up. There's some potential criminal implications. I threw that in there because it's important to know, but it's usually those large violators that the agencies get upset and go after. And then there's individual lawsuits. The worker could sue you because you didn't have workers' comp coverage and they got injured while working for you. Or they could sue you for the unpaid wages and overtime. So, and the reason why I really think it's important to kind of remember this and really pay attention to this area is because the DOL, the DES, the IRS, the USDOL, they're all paying attention to this. And this has been a wonderful source of revenue for them the last couple of years. And there has been a large push by these agencies to crack down on violators, misclassification, because it's a nice source of revenue because they collect unpaid back taxes. And they also are there to protect the workers and make sure that they're getting properly paid, that they get unemployment insurance, they get workers' comp insurance if they are in fact doing services for you. So something to remember and to think about. What I want to do is let's decide that our chemical engineer and our business manager, neither one has their own independently established business. You do want to keep a close eye on them for a while. You want to be able to exert some control over them. So you decide, I'm going to make them, oops, I was like, who is sitting in front there? Let's make them an employees. So now you have your first employees. You're employee number 1, they're employees number 2 and 3. Congratulations. What does that mean? What does it mean to have an employee? Maybe some of you know that. Maybe some of you are very seasoned business owners here and you know what this all means. But I'll kind of really go through it very quickly, high level. You got to set up a payroll system, right? You have to track what you're going to pay them, and you have to be able to calculate the withholding taxes on them, as well as paying your own payroll taxes. There's a Social Security match. There's the unemployment tax. There's a couple of others too. There's a federal unemployment tax as well. So you have to figure that out. You have to obtain workers' comp insurance on them. And you have to decide if you're going to offer them any employee benefits. Maybe, when you're this size, a couple of people, you don't have to offer them anything other than a wage or a salary. But to attract good people, you might have to start thinking about, well, you know, they say they want some paid time off. Oh my God. So you have to think about that. They might ask you about health insurance. Tell them to go to the marketplace until you have 50 or more full-time employees. But you don't have to offer those types of benefits right now when you're this small. The ones that are legally required by law is workers' comp and the unemployment. Unemployment tax that you pay is actually an insurance scheme. And it's basically purchasing insurance so that if that person loses their job through no fault of their own, you lay them off, you terminate them because you don't like them, whatever, as long as they haven't voluntarily resigned and not committed some sort of serious misconduct, they would qualify for unemployment benefits. That's what unemployment is. It's an insurance policy. So those are the only two benefits you really have to offer by law, even with one employee.
Can you repeat that one more time? So you said if you purchase an unemployment policy?
No, you don't purchase it. You pay a tax to our state unemployment agency, Department of Employment Security. And basically, it is like an insurance scheme because everyone's paying that tax as if they're paying a premium. And that's because they call it unemployment insurance benefits. So that when the person needs it, they can file the claim and get the benefits. That's how it works.
Doesn't matter if it's part-time, 10 hours a month.
Correct. It doesn't matter. Doesn't matter. What you would do is you're going to set up an account with Department of Employment Security. You're going to file quarterly reports where you list the people you employ and you list the wages you paid. And you're actually only paying the tax on the first $12,000 they make in that calendar year. So there's limits on it. It's a fairly low tax, especially when you're new. It's very low rate, but it's something you want to make sure you do.
So you're the employee that was working part-time and you lose your job, and you file for unemployment.
Yep.
Is there a limit to how much you can get?
Oh, yes. Yes, the statute lays out the limits on the amount of benefits a person can collect based on their prior wages. So unemployment would send you a form and say, okay, this person's filed a claim, tell us the reasons for separation, please confirm their final pay, what their wages were, so that they can then calculate the benefit. So yeah, that's all laid out in the scheme. So it may not be that much money, but it's something you have to pay attention to, because if you don't do it, and they come after you later, then there's the unpaid tax plus interest plus late filing fees because you didn't file the quarterly report. So they get you one way or another. Yeah.
I think that's one question you mentioned about employee benefits.
Yep.
So we offer healthcare, but it's employee funded, like we don't share the cost.
Right.
Is there any requirement that if we offer the program but we don't pay any share, that's going to be equal across the board, which we've kept equal. Mm-hmm. But they also have the ability to go to the marketplace. Mm-hmm. Is there anything as an employer, by offering healthcare, dental, health, that I'm obligated to do because it's offered?
No, not until you get to become the large employer, the 50 or more full-time employees, then you have obligations to pay for some of that coverage. But when you're a small employer, then you can offer whatever plan you want and whatever terms.
Employees can choose the company or the market.
If you're allowing the people to pay with pre-tax dollars, you set up like what they call a cafeteria plan, so that then if they're paying $500 a week for their health insurance, that at least is not taxed, then you have to be careful and make sure you are treating everyone equally, that you're not like paying for the owner's policy and not everybody else's, because then you're going to run into discrimination issues under ERISA, which is the employee benefits law.
To clarify, so I am the owner of the company.
Yep.
And I pay my own benefits, and employees.
Do you have the same plan?
There's two plans that they can choose from.
You would want to consult with a benefits attorney. I don't do benefits work per se, because it's a very complicated type of law. But that is something you want to know. But if I'm paying for mine, am I doing it the right way, but not the other employees? Is it the way? Because I know that there are discrimination tests that if you're favoring highly compensated employees, maybe your employees are more compensated than you are. But if you're the highly compensated person and you're treating yourself much more favorably than everyone else in the plan, it can lose its tax status. So that's something to definitely to look into further. Okay, so the first thing I think you need to do is get an offer letter. So if you're going to give employment to this chemical engineer or to this business manager, you want to have an offer letter. Why? There's a few things. One, New Hampshire law requires that you, as an employer, provide employees with a written notification of their rate of pay and the terms and conditions of all your pay practices, and that they sign that notice. The easiest way to do that is usually an offer letter, where you're laying out the basic terms of your offer of employment. I'm going to hire you as a chemical engineer. I'm going to pay you this amount in wages. And here's our pay periods, here's our pay days. And pay days have to be at least weekly. They can be bi-weekly if the payday falls within 8 days of the end of the first work week in the pay period. If not, then you have to get special permission from the New Hampshire Department of Labor to pay less frequently than weekly. So keep that in mind. That is something that I always, always, always find people still are not aware of.
You say that again? You can't pay them every other week?
If you pay them every other week, let's say I have a Sunday to Saturday work week, I have 2 weeks. If I pay them on that following Sunday, which is not going to happen, then that Sunday is within 8 days of the end of the first work week in the pay period. The pay period has 2 work weeks in it. You have to pay people within 8 days of the end of that work week. So weekly pay works. Bi-weekly pay, if your payday falls during the second week of the pay period, so you're paying currently, is okay. But beware if you have non-exempt workers and you have to pay them overtime. But if you want to pay somebody bi-weekly but just pay it later in that following week, or you want to pay semi-monthly or monthly, then you have to apply for written permission from the Department of Labor. It's a fairly straightforward process. If you're a very small employer, you say, look, it's an administrative burden to have a weekly pay period or pay days. And as long as you're in compliance with that and you're carrying your workers' comp, because Department of Labor takes care of pay periods, wage and hour, and they have a division that takes care of workers' comp, and they'll walk across the hall and make sure you have a workers' comp policy on file before they'll grant you that permission. But then it's a pretty straightforward process. If you go to their website, you can find it. If you need help, let me know. But that's something that trips up a lot of people. So the offer letter is also a good place to spell out the fact that this is at-will employment. And yes, we still have at-will employment in this state. But what does that mean? What does it mean to be an at-will employee? It means I'm employed for an indefinite period, for an indefinite period of time. There's no specific time limitation on how long I'm going to be employed. And I'm employed in a manner where either I or the employer can terminate my employment at any time, with or without notice, with or without cause or reason. Unless they can't fire me for an illegal reason. They can't fire me because I'm a woman, they can't fire me if I'm disabled, or because I'm disabled. They can fire me if I'm disabled, but they can't fire me because I'm disabled. They can't fire me because I filed a workers' comp claim. Okay, those would be illegal reasons. But other than that, that's at will. You can be terminated without notice.
If you don't have that statement, is it still in at will?
Generally it is.
In New Hampshire?
Yeah, in New Hampshire there's that assumption that if you're employed for an indefinite period, then it is at will. But careful about that, because then people might try to bring in other things like, well, you told me as long as I wanted, I could have a job here. You told me this, or you told me that. And so if you have it in writing, it's very clear. The other thing you want to be careful of is a lot of times we say, well, all right, I've got this chemical engineer. If he decides to leave me, I'm really up the creek. So I'm going to make him require that he give me notice if he's going to resign. Well, you've just destroyed the at-will status. At-will means either the employee or the employer can terminate the relationship with or without notice. So if you're going to say he's going to give you notice, you now have to give him notice if you're going to terminate him. So beware of that. The other thing the offer letter should spell out are the conditions to the offer. Let's say you want to run a background check on the person. Let's say you have funding issues and the job is dependent upon funding still being available. I always think that's a good thing to put in. The other big condition is an employee. You want the person to sign an employee agreement. What do I mean by that? Non-competition, non-solicitation, non-disclosure agreements, which I'm going to talk about right now in 3 minutes. Those are highly important. And what I recommend is that if you're going to ask a person who you're going to hire to sign that type of restrictive covenant agreement, you need to give it to them on or before the day you give them the offer. Why? Because we have a statute in New Hampshire about that. Our statute right now says that prior to or concurrent with making an offer of employment or change in the person's job classification, you must provide them with a copy of a non-compete or non-piracy, which we're not quite sure what that means, actually. Probably means a non-solicitation agreement, on or concurrent with the offer. So I go back to, and if you don't, then the contract itself is void. So everything you have in that contract about non-disclosure, confidential information, assignment of developments would all be null and void. So that's why.
Has New Hampshire not just changed to make non-competes basically very difficult to enforce?
Okay, good question. That was what they did back in 2012 to try to put a control on non-competes. Now, there has been a movement in the state legislature this season to either repeal that law because it has a lot of practical problems to it. For example, let's say you've been using your chemical engineer for a couple of years, and then you realize, ooh, my business is getting really successful here. Now I want to impose a non-compete, midstream, mid-employment. We're not sure under that statute whether you can or not. So it's important that there's been a lot of movement in the legislature to either repeal it, change it, amend it, restrict it, application, clarify it, because we don't even know what a non-piracy agreement is. I could say you're pirating my employees, you're pirating my IP, and that would be, and so if I have an agreement that says you're going to assign your developments to me, that could be considered a non-piracy. So it's very unclear. They haven't yet voted or finalized any laws that would change or any amendments to that law yet. So it sits on the books. In the meantime, you have case law. In the meantime, even if you follow that statute, New Hampshire courts will only enforce a non-compete or a non-solicitation agreement that is reasonably narrowed in its restrictions on the employee. That's always been the case, and that continues to be the case. And I have some slides in here about what it means for reasonable restrictions. And I'll get to those in a second. But I just want to kind of run through the offer letter a little bit more. So that's why I say attach that non-compete or non-solicitation or non-disclosure agreement to your offer letter. So you tell the person, here's the offer, here's the terms, look it over. And so before they accept your offer, they've had a chance to look at that agreement. And then have the employee, if they are going to accept your offer, to sign the offer letter so that you have evidence that they accepted it, knowing the terms of the employee agreement. I'd like to touch on this next thing. It's like, okay, so how am I going to pay these people? My chemical engineer and my business manager. Am I going to pay them an hourly rate, a salary? Maybe I'll just pay them like, $500 a week. Make it simple. Call it a salary. I'm good, right? Not necessarily. There's federal wage and hour laws and state wage and hour laws that are still applicable to you, especially the state, as to whether or not you can pay them as exempt from overtime or non-exempt from overtime. That's what exempt and non-exempt mean. Means a person, and this is again, the assumption is everyone's non-exempt, meaning you have to pay them overtime if they work more than 40 hours for you in each work week. You can classify them as exempt if a couple of things happen. One, you are actually going to pay them on a salaried basis. But just paying them on a salary basis is not enough. You have to also show that their job functions meet one of the exempt categories. And usually we're talking about the white-collar exemptions. Executive, administrative, professional, outside sales. Outside sales does not have to be paid on a salary basis. As an attorney, I would fall into the professional exemption. Guess what? They don't have to pay me on a salary basis. But any other professional has to be paid on a salary basis. And right now that salary basis is you have to pay a salary of at least $455 a week. There's been a lot of stuff in the newspaper about the president saying, that's way out of date. We really need to up that level. We need to make sure more people are getting the wages that are due them if they're working more than 40 hours in a week. So more people should be non-exempt, less people should be exempt. Only those people that are high-level executives, managers, should be getting exempt from overtime requirements. Administrative professional, let me give you an example. The chemical engineer that we talked about. Assuming that person has a bachelor's degree, is going to be doing some sophisticated work for you that would require at least having a bachelor's degree for qualifications, we can fit him under the professional exemption, but you have to make sure the salary you pay him is at least $455 a week in order to continue to treat him as exempt, meaning I don't have to track his time worked, I don't have to pay him overtime if he goes over 40 hours. He can work as many hours or as few hours as he needs to. I'm still going to pay him the same salary each week. If you start deducting from that salary, because he's not coming in on Mondays, he's only putting in 4 days a week, so when the days he's not here on one day, I'm going to prorate his salary, that's not allowed. A salary being paid on a salary basis means you are paid the same amount every pay period, no matter how much or how little work you do, as long as you do some work in that pay period. That's what a salary means. So if you've treated them as exempt, you've paid them a salary, if you start deducting from that salary based on the hours they're working, you destroy the exemption, and now you have to make sure you're tracking their hours worked so that you're paying them overtime. Yep?
So I think this ties a couple issues, and this could be a side question, but we're a cash-based business. We invoice monthly, so obviously our accounts receivable are received at the end of the month, and so we payroll on the 15th and last business day typically, twice every month. It is a flat rate, and then all balance of base and commissions are paid at the end of the month.
Right. Mm-hmm.
So, but the base compensation is not divided equally between those two payments. Does that matter?
You and I are going to talk after.
Okay.
Because now you're getting into how do I figure out the overtime rate? And is it based on the base compensation? Is it based on more?
Professional only. So
Oh, you're paying them, oh, I see. So you're paying them a salary, but it's semi-monthly? And it's,
so let's say it's $4,000 a month,
if it works out to,
$1,500 and $2,500
Mm-hmm.
for that.
I think what you can do is you would you take what they make in a year, or extrapolate out what they'd make in a year, divide by 52, and if it's above the 455, you're okay. Yeah, so that's the salary. Okay, I thought you could ask me an overtime question. So you need to decide how I'm going to categorize them, how I'm going to classify them, and that's when you can start to figure out how you're going to pay them. The other thing, quick note about incentive pay, commissions and bonuses. Maybe you decide, a cash basis business, I can't pay them unless I get paid. So maybe I'll just pay them on a commission basis. Or you know what? Okay, but again, you're not paying them on salary, so now you've got to pay them. Now they fall into that non-exempt category. So that's one problem there. But the other thing too is make sure if you're going to do a bonus or a commission scheme that it's in writing, not on the back of a napkin. Oh, I'm going to pay you here. I'm going to pay you 5%. Or whatever you make, it's yours. There's my word and my bond. Not enough. Why? I don't know what 5% of is of what? Of what? Is it what you make? Is it what I get paid? Is it after profit? I mean, is it after costs? Is it on my profit? And what if you made it but somebody else helped you make it? Do you get 5% of the whole thing, or 5%, or do you split it? What happens? What happens when you leave? Let's say our employment ends. Are you going to get 5% of everything you booked, or just everything I got paid, or everything I did? A lot of questions, and if you don't have that in writing, the Department of Labor will interpret for you what you are supposed to pay the person. And there's definitely some New Hampshire case law on that, where some employers got stuck owing over $100,000 in unpaid commissions because they interpreted the commission plan to say, you're only going to get commissions on the sales that I've been paid for by the time your employment ends. They didn't have that in writing. So the default rule, the Department of Labor ruled, was he gets commissions on everything he booked before he left. And there was about $100,000 in commissions that were booked but not yet completed. So if you want to to control when a commission is earned, explain how the commission's earned, and what a person's entitled to when employment ends, needs to be in writing. It will be, if it's done very clearly in writing, the Department of Labor and the courts will defer to it and uphold it, but you have to have that in writing. Why? We go back to that law that says you have to tell your employees in writing rates of pay, terms and conditions of your pay practices, and your pay plans. Very important to have that in writing given to the employee. Okay. Employee restrictive covenants and non-competes. Yes, they are still enforceable. The gentleman's not here. But yes, they are still enforceable. But why do I say seek legal assistance? Because we're talking about the types of agreements where you're asking your employees to, one, identify, you're going to identify for your employees what's confidential information. Your trade secrets, your formulas, that formula for the cleaning solution, the finances your business manager is going to know about, your pricing, your margins, all that confidential, sensitive information. They're going to know that. And they're going to start forming relationships with your customers. And maybe they're even going to really learn how to do this business well.
Does a company have to tell you this is a trade secret and give you a list? These things are trade secrets and put it in writing?
With trade secrets, there's actually a statute that says it describes what a trade secret is. And so you wouldn't have to say to a person, this is a trade secret. But you have to treat the information as if it's a secret. You have to identify it as confidential. You have to treat it as, you have to limit access to it for it to be considered a trade secret. And then there's a statute that protects your trade secrets. But there's other information. Maybe you haven't been as careful in how you treat your customer list. Maybe you haven't been as careful about how you're treating all your contact information about your customers because you want your whole sales force to know how to go after your customers. Maybe you haven't been as careful in treating your financial reports, your profit and loss statements. So that's why an agreement is helpful, because you'd be defining not just your trade secrets, you're defining all information you consider confidential. And you have the employee agreeing that they won't disclose it, they won't use it for their own personal gain. The agreement is what allows you to really protect the confidential information that doesn't meet the definition of trade secret in the statute. But you still want to tell the employee this is highly sensitive information. You can't use it for your own benefit and you can't disclose it while it remains confidential. A non-solicitation agreement is where you tell the employee, you cannot solicit my customers or clients. You cannot solicit other employees to leave. Excuse me. And then a non-competition is the most restrictive, because it's saying you cannot go to work in this particular business when you leave my employment for a period of time. Because this is so restrictive on people and their ability to earn a living, they are very narrowly enforced. And they need to be narrowly crafted. I work a ton on non-competition agreements and non-solicitation agreements. And what I tell my employers, I know this is difficult, but it's actually better if you have levels of agreement form. So let's say my business manager is going to be somebody who's going to have a lot of access to confidential information, but not customers. Okay? So I want her to sign a non-disclosure agreement, but I don't need to put non-solicitation stuff in there. My chemical engineer, he's going to know a lot of my information. I'm going to be sharing with him how I do this business, how my distribution channels are going to work. He's going to help me set up this business. He's going to know everything about this business. He's going to know everything about my customers, because he's going to be troubleshooting with them on things. I might want him to sign a much more restricted. He's going to be a key employee, because he's going to hold the knowledge about how the solution really works. So if he leaves me and he goes to work for a competitor, he can tell them a lot of what's very confidential to me. He can hurt my business. So if you can show that, then a non-competition, which is the most strict, could be enforceable against that person. The key is you really need to tailor them. So I say, you know what, your low-level employees, they sign a simple non-disclosure. Your more mid-level customer service people, your salespeople, non-solicitation agreement. for sure, with non-disclosure obligations. My key technical people, non-disclosure, maybe a very, very narrow non-compete, and an assignment of developments. An assignment, so whatever they invent, whatever they develop, is a work for hire. And I, the employer, own it, not the employee. And they agree to assign any IP rights to me. So that's one benefit of having them be your employee. All right. Okay, I think am I out of time? Okay, yep, that's fine. There's a lot more in the handout about terms of non-competes and restrictive covenants, so please refer to that. When you start an employee, really quickly, some tactical stuff, there's a Form I-9. Every employer, anyone you employ, you have to verify that they're legally authorized to work in this country. So immigration has developed a Form I-9 that the employee fills out the first part. They then have to provide you documents that verify their identity and their authorization to work in the US, their immigration status. And then you fill out the rest of the I-9. You have to keep those on file and make sure you fill them out. It's a very technical form, but make sure you're doing that for employee number one. Form W-4 is the IRS form where the person tells you what their tax status is, how many deductions, that type of thing. The new hire report, remember, that's employment. Every state has a scheme set up that you have to report to a state agency. In New Hampshire, it's Employment Security. All your new hires. Anytime you hire an employee or an unincorporated independent contractor, you have to fill out a new hire report form, which you can find on the DES website, and submit it to DES. There's time frames that you have. Why? Because this was what was set up for probate courts and family courts to be able to go after deadbeat parents. They can look at, in the New Hampshire one, to say, oh, is that person working somewhere? If so, we can get them in here for their non-payment of custody or child support. So new hire reports on the DES website. Oh, there's also, even though you're small, if you are subject to the federal wage and hour law, meaning that you have sales volumes of about 500,000 or more in the year, you are subject to the federal wage and hour law called Fair Labor Standards Act. Because you're subject to that law, you also will have to give employees, this just started in October, a notice of health care options. Even if you don't offer health insurance, you have to give them, there's two model notices. One is used with employers who do offer health insurance, and the other is a notice that employers who don't offer health insurance have to give each new employee. Just talks about the fact there's a marketplace, there's a healthcare exchange, it's under the Affordable Care Act. But that can be found on the US Department of Labor website. And then finally, I just want to say what I did, because you all stayed, you get a prize. The prize is this. I've used this in the past with other clients, and I've kind of tweaked it over the years. But it's basically a checklist for new hires. It's sort of your onboarding process, and when you are hiring someone new, sort of a checklist you can go through. So I wanted to give those out to you today as a gift, a parting gift, a lovely parting gift.
So while we're doing that,
I'll give some down here too.
does anybody have one question to wrap us up, or should we save it for? We have one more question. We'll wrap it up with there, and then we can move on to our refreshments. Keep talking.
Are there any companies that you would say that could do this as an outsourced service locally? So rather than us having to think about all of these things, you just say...
Yeah, you can outsource it. Believe it or not, you can hire independent HR consultants that can help you set up a system. One thing you can do is payroll companies. There are some decent and not so decent payroll companies in the state that will help get your payroll set up, will communicate with the Department of Employment Security for your unemployment stuff, your new hire stuff. And there's a couple of good payroll companies for that. And they're local, which is nice.
What about the whole thing?
The whole thing, HR consultants. There are definitely some very good ones in the state that will come in and set you up and set a process up. And they are in business for themselves. They do have other clients. They might come on site, but you know, for a day or two. But yeah, there's some very good ones.
My CPA also does it himself. Does my taxes and helps me with hires.
Yeah, CPAs will help you set up your payroll as well, and make sure you purchase. I don't know if he organizes getting your workers' comp insurance, but there's, you know, help with making sure the offer letters look good. What I would suggest, though, is with the employee agreements, if you want your employees signing those, please get legal assistance. That's your most important information. That's your most important, that's the heart of your business, your customer relationships, your confidential information. Don't just get a form off Google, please. Because I said, they do need to be customized and tailored to your business if you want them to be enforceable, and you want them to be enforceable. So please hopefully you've got a business attorney or somebody to look it over, because those are very, very important documents, especially starting out, I think, for startups, so that you don't have someone come in, be a total disaster as far as being an employee, and then going off and taking your trade secrets or taking your information with them. So that's it. That's my wrap up. I hope the form is useful. If you have any questions about it, please let me know, or any questions about about anything here, please let me know. My information's on, I think, the first slide. So.
Thank you very much.